2001, America's seventh largest company pulled off the biggest corporate heist in history, and the victims were their own employees.
Then American history took off. Enron filed for bankruptcy December the 2nd.
WorldCom is about destroying a potential legacy with pure dishonor.
$107 billion in assets made this the largest bankruptcy in the history of the United States at the time. This also happens to be one of the largest accounting scandals in the history of the United States.
Arthur Andersen is not only a defendant in this case, they just settled. They are defendants in WorldCom, Enron, McKesson, Global Crossing.
Every number tells a story of performance and success. In business, numbers are trusted. But what if they don't tell the full story? In today's environment, the pressure to perform can lead to actions that compromise the truth. Revenue often becomes the target. On the surface, everything looks normal. But in reality, transactions may be fabricated and cash movements manipulated. This is revenue fraud. When internal controls are weak, these issues can happen without being detected. That is why auditing is crucial. But beyond procedures, what truly matters is integrity, honesty, and accountability. Because financial reporting is not just about numbers. It is about trust. So can we really trust the numbers we see?
Welcome to Audit Talk, where we uncover the truth behind the financial statements. So today, we will discuss one of the most critical issues in auditing, revenue fraud. From fake sale to hidden cash thief, these issues can seriously mislead financial statements. So now, let's explore one by one what is actually happening behind the scenes. So today, we have SYAFIQAH here. So SYAFIQAH, let's talk about one of the most common revenue fraud. SYAFIQAH, can you explain what is a sham sale?
Sure. Sham sale refer to fake transaction or company records sale that never actually happened.
So basically, the sale doesn't exist?
Exactly. They might create fake customer or record sale without delivering goods. So this violates the objective of the occurrence audit, which means the transaction must occur.
So this is like creating profit out of nothing?
Yes, and it can seriously mislead financial statements.
So this shows that even when a transaction looks legitimate, it may not actually exist. And that is what makes sham sale so misleading. Thank you, SYAFIQAH RODZI. That was really eye-opening. So stay with us. We'll be right back. Welcome back to Audit Talks. Now let's bring in DAVISHA to walk us through this. DAVISHA, can you explain what premature revenue is?
Yes, the premature revenue recognition happens when the company records sales before the goods are delivered.
So they recognize revenue too early?
Exactly. The violates the cut-off audit objective because the transaction must be recorded in the correct accounting period.
It looks like they are performing better than they actually are.
Yes, and the scary part is everything can look completely normal on the surface, even though the timing is wrong.
Wow, so even when the numbers look fine, they can still be misleading. So thank you, DAVISHA. That is actually quite concerning, especially for users of financial statements. Now, let's move on to another issue that is even more serious. Now, move on to the critical issue in the revenue cycle, one that doesn't just involve timing, but actual cash being manipulated. Now, let's hear from ALLISYA on this. So, ALLISYA, have there been real cases like this?
Yes. While not always labeled as cash lapping, many real-world fraud cases involve manipulating cash records to conceal debt. For example, in large corporate scandals such as WorldCom, management manipulated financial records to hide the company's true financial position.
I love to hear about WorldCom. So how does that relate to cash lapping?
Cash lapping works on a smaller but similar concept. It involves taking money from one customer and covering it using money from another customer.
So it is like covering one lie with another.
Exactly. For example, when customer A pays, the employee steals the cash. Then when customer B pays, the funds are used to cover customer A account.
Can it become a continuous cycle, right?
Yes. And it keeps going until someone notices a mismatch.
Wow, that sounds hard to detect.
It is. That's why auditors use procedures such as pre-listing of cash receipts and remitted advice to detect such fraud.
So, from fake sales to manipulating timing and even cash being stolen, this issue points to one major problem: weak internal control. So, thanks, Alisha. That was really insightful. It is definitely shows how dangerous this type of fraud can be. Welcome back to Audit Talks. As they say, fraud isn't just about opportunity. It is about the absence of control. And that brings us to a deeper issue behind all this problem. Let's bring in Dina to discuss about this issue. So Dina, can you explain why all this fraud actually happened?
Okay, yes. Most of this fraud occur because there is a lack of proper internal control within the organization. One major issue is the lack of segregation of duties, where one person handles multiple responsibilities. For example, the same person could be recording sales, receiving cash, and updating accounts.
Wow, a lot of duties on the same person. So basically, too much power in one person's hands.
Exactly. And when there's too much power without proper monitoring, it creates an opportunity for fraud to go undetected.
Does this happen in real companies?
Yes. A well-known example is Enron scandal. Enron manipulated its financial statement by hiding debt and oversetting revenue, largely due to weak internal controls and inadequate oversight. Management had too much control without effective checks and balance, allowing the fraud to continue for years.
Before this, Alisha talked about WorkCom, and now Dina talked about the Enron manipulated financial statements. So even large companies are not safe.
Exactly. Without strong internal control, any organization can be exposed to fraud risks.
So Dina, how can prevent this?
Company must implement strong initiative, internal control such as proper segregation of duties, clear authorization, and independent checks like pre-listing of cash receipts. At the end of the day, internal control is not just about following procedures, it is about protecting the integrity of financial information. Without it, even small weakness can lead to serious consequence.
Wow, thank you, Dina. That was truly eye-opening. It is clearly shows that without strong internal control, fraud become almost inevitable. And it also reminds us that fraud is rarely accidental. It happens when systems are weak and when responsibility is overlooked. This highlights the importance of having proper check, clear rules, and have a strong segregation of duty. Because without this control, even small weakness can lead to major consequences. So today, we have uncovered some of the most common revenue from sham sale, premature revenue, cash overlapping, and lastly, we have covered about the weak internal control. All these issues show how easily financial information can be manipulated if proper control are not in place. And this is exactly why auditing plays such as important role, not just to detect error, but sometimes to ensure transparency, integrity, and accountability in financial reporting. As future professional auditor and accountant, we must remember that numbers are not just figures; they represent the trust. And once the trust is broken, the impact can be far greater than just financial loss. So, whether we are preparing accounts or auditing the client, integrity should always come first, because at the end of the day, numbers can be manipulated, but integrity cannot be fake. Before we end, I would like to extend our appreciation to our panels. Firstly, we have SYAFIQAH, DAVISHA, ALLISYA, HANIM, and lastly, we have Dina. Thank you for their insightful thoughts and contribution throughout the discussion. Your perspective have truly brought this topic to life. And to our audience, thank you for watching Audit Talks. I hope today's discussion has opened our eyes to what really happens behind the number. See you next time. Bye-bye.